Hello everyone, today I'll be talking about the Terra Luna ecosystem and why I'm so bullish on it. So as always, I respect your time, so if you are just here for the bottom line, I'll give you the main point of the video right away. And so why I'm so bullish on the Terra Luna ecosystem is because there are more and more people using stablecoins. And I think the stablecoin of Terra Luna, which is UST, will be widely adopted in the whole world. And that is why I'm so bullish on Luna as well. So if you want to know more about the Terra Luna ecosystem, you're welcome to stay throughout and leave a like and comment while you are at it. So to explain to you guys what is the Terra ecosystem all about, I'm going to use the Ivan on Tech's written article to explain the ecosystem. So basically, what is Terra Luna, right? So Terra Luna is actually made and built by Terraform Labs. And the Terra mainnet actually first introduced the Terra KRW token, which is actually a stablecoin pegged to the Korean won currency. So it has actually been used in the real world already, okay, back in Korea. So how does this blockchain actually work? So they actually use the Cosmos software development kit and uses the Tendermint proof of stake consensus mechanism. For ecosystems, we need to talk about the transactions, right? So the transactions on the Terra blockchain takes seconds to settle. I have tried it before and I would say it's very fast. The cost of transaction fees is actually cheap as well, but it's not as cheap as Polygon, but it's definitely cheaper than gas fees on Ethereum. So to move on to the star of this ecosystem, the Terra USD, which is better known as the USD coin. So it is a stable-coin built on the Terra blockchain, which only commenced just last year September. So it's actually not collateralized, but the whole concept of the USD is actually enabled by the burning of Luna coin. So the whole concept is pretty interesting because the value of USD is determined by the demand and supply for the asset, and it fluctuates. USD is not forever at $1. It could be fluctuating around $1. So maybe it'll go down slightly sometimes to 90 something cents, sometimes it'll fluctuate upwards to $1 plus. Okay? So how do they actually maintain the price of USD to around $1? What happens is when the price of USD rises above $1, holders of Luna can sell their Luna for UST. Luna can be exchanged for the equivalent dollar amount of UST. So it's creating an arbitrage opportunity. When this occurs, new UST coins are minted. And so the market cap will definitely decrease, right? Because the supply of UST increases. And this will help the UST coin to reach back to its $1 price tag. So when this supply increases of UST, it will definitely lead to an upward price for Luna as well. Because let's say when USD falls below the $1 peg, it can be sold for Luna to make a profit, so arbitrage as well. So this in turn brings USD back to $1, and when this occurs, Luna is burnt, so making Luna more scarce, therefore more valuable, and therefore Luna's price will definitely increase as well. So with increased utility and more people using the ecosystem, the USD will become easier to spend, and so the price of USD could remain slightly above $1. I know most people will think, so what if Terra USD loses its peg? Well, that's only if nobody uses the ecosystem anymore. And this is the risk you have to take. So Luna coin, I already talked about it. So the burning of Luna coins will help to stabilize the USD stablecoin, right? And this relationship between Luna and UST is like a relationship between Earth and the Moon. The Luna logo actually looks just like a moon. Talking about the protocols built on the Terra ecosystem, I'll be mentioning two of the top used DApps. One of them is called the Mirror protocol, basically facilitating synthetic stock trading, so we can have exposure to stocks without actually holding any shares, which is quite interesting, and they have been pretty successful. Another protocol is the Anchor protocol. So it just launched early March this year, and is basically a savings protocol targeting non-crypto natives to give them a chance to use DeFi savings product that is very simple and easy to use. I'll be sharing with you later in the video as well. So guys, why do you think I'm so bullish on UST? Well, I'm bullish in stablecoins in general, mainly the use of stablecoins. Why do I think that? Okay, looking at this chart, the stablecoin index, okay, this is going by volume. Back in 2018, there wasn't much use of stablecoins, right? But as the years goes by, there are more and more stablecoins emerging, and the volume starts to increase. And all the way till May of this year, the volume of stablecoins was the highest. Why? Because most of you guys remember the Bitcoin crash, right? And so what I think is the crypto market will not be forever stable, right? There will be ups and downs. And when the market starts to go down, more people will start to buy and convert their crypto into stablecoins. So there will be definitely more use in stablecoins, and one of the stablecoins that will be most used, I would say, is UST, because of how it works and how it works with Luna, which is a crazy concept. Okay, over here, I'm using CoinMarketCap to show us the top stablecoin tokens by market cap and the volume. So obviously, Tether will be number one, right? Followed by USDC. Coming third will be BUSD, fourth DAI, and then on the fifth one we have UST. It's amazing, right? How the growth of UST is so fast. It was only created just last year, the number 5th stablecoin. So that's why I'm crazy bullish on UST. Another reason why I think the Terra and Luna ecosystem is going to be huge in the next few months and years is because they are having multiple partnerships with other blockchains like Harmony One and Solana. See, as you can see this article over here, Solana blockchain has added Korean stablecoin Terra for better payments. So this is very bullish for Terra ecosystem because this gives exposure to the UST coin. And when there's exposure to the UST, people know more about the Terra Luna ecosystem and might take an interest on it. So, increasing trading volume and exposure. I'll just briefly mention the other protocols that are already existing in the ecosystem. Over here you can see it's a tweet created by Finn, alright? And he's just mentioning all the different protocols on Terra and what does it do. So the main few, like I talked about, Mirror is for mirror assets, Anchor is for savings, there's Ozone for insurance, there's a Launchpad, alright? And Nebula, an ETF platform which is coming out very soon. And there are many others. You can check him out, Finn to the moon, alright, on Twitter. Moving on to what I'm doing currently on the ecosystem is firstly Anchor protocol. Remember what I mentioned? Anchor protocol is a savings protocol. So what I'm doing now is I have my UST and I have deposited into Anchor protocol, and it earns me 19.52 APY. That is pretty good. Basically earning 20% on your stable coins. So I deposited about 370 UST back in July 12th, and right now my total deposit is about 375, means I've earned about 5 UST in a month. You're earning 20% APY on stablecoins, which is an awesome deal. Another thing you can do in this protocol is you can actually borrow UST. But the only downside is you only can use Luna as your collateral. What does having your Luna as a collateral mean? This means that you're basically allowing your Luna to be bonded over here on the protocol, and then you borrow UST against it. So in any case, when Luna's price suddenly drops significantly and you get liquidated, I'm sure you've heard this before, right? So your collateral will be used to pay back what you have borrowed. So basically, why I'm not using this currently, I'm not borrowing any Luna currently, is because I still see Bitcoin in a zigzag motion. I'm not bullish on it yet, right? It's still trading in the 30 to 40k region, so I'm not confident in it yet. So I don't want to invest in Luna currently. But in future, I'll definitely use it when Bitcoin is more stable and when the sentiment is a bit more bullish, and then I will get my Luna, I'll provide it as collateral, and I'll borrow more USD. And with your borrowed USD, you can have so many things to do with it. Using it to stake on other platforms, or you can just put it back in the earn section, deposit it here, and earn more interest on it. That's one strategy. And I heard that they'll be introducing BETH, basically Ethereum, and you can use it as collateral now. And I guess you can say Ethereum is more stable in the sense where it wouldn't fluctuate so much, right? That's because it's the second altcoin. And in the bond section, you can use it to convert your Luna to B Luna. So yeah, that's Anchor protocol for you. Alright, so the next protocol that I want to share with you guys is called the Mirror protocol. So this Mirror protocol is basically you can trade synthetic stocks. If you want some stocks exposure but you don't want to own it, you can use this protocol. So over here, you can click on the farm section. So what they're offering currently now is the major few stocks, right? And also commodities like silver, AMC, right? Square, Coinbase, the ARK ETF, Airbnb, Baba, Twitter, right? There's so many. You can see over here all the APYs. There's long and short. Basically, long means you are basically betting that the particular stock or asset will go up. And if it goes up, you earn extra APY on it. Okay, in the long farm. In the short farm, you can see generally it's definitely higher APY because usually most stocks go up compared to going down, right? So they're paying you extra. So you can explore this. Another function is called the borrow function. So basically, you can actually borrow the asset. And the good thing about Mirror is you can use UST as collateral and also AUST. What is AUST? Well, back in the Anchor protocol, remember I deposited my UST in it, right, to earn U. When I deposited into Anchor, my UST becomes AUST. And so you can see here, see, I can click on my AUST, I can choose how much I want to use it as collateral, click it, and you can set your collateral percentage. So about 200% means I can borrow about 50% of this value. So everything converted, I can actually borrow up to 0.068 of Google share. That's pretty nice, right? You're just basically borrowing the share and using your AUST, which you have already put into the protocol, Anchor protocol, and basically this is earning your U for free. That's another method. Mirror protocol is one that I would recommend to people if they want to try it out as well. But do your own research. There are many strategies out there. And if you want me to make a new video on different strategies on how to use Anchor and Mirror to earn extra U, do let me know and I will do a video on it separately. So that's it from me. If you like this video, please hit the like button if you haven't already. I make videos weekly, so subscribe if you want contents like this. And if you want to earn interest in your crypto, you can use Blockfi and receive up to $250. Link is in the description below. And in the following week, I'll probably publish another NFT video, so stay tuned. As always, invest safe and smart. The markets are always here, but your capital may not. Peace.